Half of households are 1 second away from living in financial disasters due to a family member passing away. Almost as if losing a loved one wasn't enough, debts, funeral costs, taxes will all come into your house like a tornado, leaving on average 1 family out of 4 without being able to pay the mortgage or get groceries, without going into massive debts. Now knowing that, that's why life insurance could get handy. But you may ask, if that's so simple, why doesn't everyone have one? While the first reason is most people just don't think about it, but also because they just don't know what it is. Fortunately for you, in this video you'll know what life insurance is, the 2 main types, how much you might need, the process, and myths to debunk. But before we dive in, real quick, if you want to support the channel, go ahead and hit the like button. And don't forget to subscribe if you want more simple and practical financial content. Alright, let's get into it. Life insurance is basically a contract. You pay a company a small amount of money every month or every year. This is called your premium. And in exchange, they promise to pay your beneficiaries a much bigger amount of money if you pass away while the contract is active. That payout is called the death benefit. And that's it. That's the core idea. This matters because of 2 core principles. 1, you will surely pass away unless you're a god. 2, when you pass away, among the things that will be passed down are your debts, taxes, funeral costs, and if you were taking care of anyone, such as a spouse or children, in most cases they'll need revenue for some time. In short, it's not really about you. It's about protecting the people you care about. Sorry. Okay, here's where it gets tricky for most people. There are lots of types of life insurance, but really they all boil down to 2 categories: term life insurance and whole life insurance. Term life is the simple, straightforward option. You buy coverage for a set period, usually between 5 to 40 years, and if you pass away during that time, your family gets paid. If you outlive the term, the coverage ends. So let's say you're a 40-year-old man, and you buy a term insurance for 40 years with a $100,000 coverage for $40 a month, and your beneficiary is your wife. If you pass away by 80, your wife gets $100,000. If you pass away after 80, she gets nothing. Quite simple and sad. That's probably the simplest and the one that most people have. Now, that was the temporary one. Let's talk about the permanent one, whole life insurance. It covers you for your entire lifetime, as long as you keep paying premiums. It also builds something called cash value, which is like a savings or investment account inside the policy. So it's pretty much like term insurance, but with a cash value inside, and it's permanent. With that cash value, you can do many things when it grows enough, and depending on the benefits of the company covering you. You can withdraw some of the money, you can borrow against it, you can do a lot. Alright, so how much is enough? Here's a simple rule of thumb. Aim for 10 to 15 times your annual income. For a lot of people, that pretty much covers everything. So if you make $50,000 a year, you'd look at a policy somewhere between $500,000 to $750,000. But that's just a basic guideline. Otherwise, think about your family's actual needs. Do you have a mortgage? How many kids do you have, and do you want to help with college? Do you have other debts? And how much income would your family need to maintain their lifestyle? Answering those questions gives you a clearer picture of what the right number is for you. Ask a licensed financial advisor if you want to be sure. This is the part that surprises most people. Life insurance, especially term life, is usually way more affordable than you think. A healthy 30-year-old could get a $500,000 20-year term policy for less than $30 a month. That's like the cost of one night of takeout. Of course, the price depends on your age, health, lifestyle, and how much coverage you want. The younger and healthier you are, the cheaper it is, which is why waiting only makes it more expensive later. Now, here's the typical process, step by step. 1. Figure out how much coverage you need. 2. Decide between term, whole life, or another form of life insurance. 3. You shop around to see what different insurance companies have to offer. 4. Don't just pick the cheapest. Make sure you're picking a serious company. 5. Now apply. Some companies might require a health check though, and if accepted, then you're set. Don't overcomplicate it. All of this leads us to a few myths to bust. Here are a few examples. I don't need life insurance because I'm young and healthy. Actually, that's often the best time to buy. since it's the best return on investment. It's too expensive. For most people, once they know the premium, they're shocked that it's cheaper than they thought. I get life insurance through work, so I'm covered. Employer policies are nice, but they're usually small, maybe 1 or 2 times your salary, and they disappear if you leave the job. You might need your own policy that sticks with you after you leave, and also at retirement. Okay, let's recap the key points. Life insurance is about protecting your loved ones financially if you're gone. The 2 main types are term and whole life, but there are other types though. A popular rule of thumb is 10 to 15 times your income in coverage, but adjusts based on your family's true needs. And it's usually way cheaper than people expect, especially if you get it while you're young and healthy. So drop in the comment. What's your opinion about life insurance? Is it useful or a waste of money? And of course, hit that like button if you haven't already. And if you want similar content, watch one of the videos showing at your screen right now.